Sellers and buyers, 2025 is here and the housing market is already showing some notable trends in rates, inventory, and pricing. Now, I know it's February, but NAR has just completed the data for housing for 2024, so we're going to have a bit of a recap of 2024 and talk about projections for the year. Hi, I'm Yasmin Scott with 360 Real Estate, brokered by Coldwell Banker Realty. I've got all the latest stats and insights to help you navigate this year's real estate market. First, let's talk about mortgage rates. The Fed rate cuts and mortgage interest rates are not hand in hand. This year, we expect to see a gradual decline. While we're not heading back to those dreamy 4% rates, most economists have forecast rates to get around 6.5%. What does that mean for buyers? Get off the fence and stop waiting for rates to drop. This also means affordability rates get a boost. Lower rates mean smaller monthly payments. What about home sales? I've got good news and I've got bad news. Bad news, it was the worst sale since 1995. Good news, it was a record high for home prices. Nationwide, the typical home price is $400,000. Existing home and new home pricing were very close. What's causing this? The size of new homes have gone down, therefore the home prices have lowered. Number two, bidding wars are still occurring. Yes, even in the middle of winter. More good news is home appreciation. In South Carolina, appreciation from the first quarter of 2020 to the third quarter of 2024 jumped to over 60% home price growth. For buyers, it's also good news and bad news. Well, the bad news is if you're a first-time home buyer, it's tougher to buy a home than 30 years ago. However, the good news is buyers' qualifying income has gone up. So you're probably saying, okay, Yasmin, so what about availability of homes on the market? Yes, inventory has been significantly low the past years. Yet, you'll see there was a bump as the year closed out. What's the short on this? Overall, home sales were slow, but they've been picking up the past few months. So our expectations are this will continue to increase, and here's why. Number one, having locked in on their mortgage rates, homeowners have equity. So if life changes occur, needing to downsize, upsize, move closer to family, return to the office, you name it, they can respond to the need. Number two, more new construction by builders will be entering the market. With interest rates coming down, builders can borrow to build. According to the National Association of Realtors, existing home sales are projected to hit 4.1 to 4.4 million, making a year-over-year increase of 2.5%. So why the bump? Many sellers who held off during last year's elections are ready to jump back into the market. Even with more homes coming to market, inventory levels are still short of meeting buyer demand. This means home prices will continue to rise at an appreciation of 3.1% for the year. That's steady growth, making this year a great year to lock in your equity or get started on building on it. Finally, what does this all mean for you? For buyers, now's the time to act before the market becomes more competitive. For sellers, demand is still strong, and with prices rising, you're in a great position to capitalize on your home's value. Just remember, having an experienced agent on your side can make all the difference in navigating the market. So let's get connected. We'll help make your move a great one this year. Yasmin Scott, Coldwell Banker Realty. Life is stressful enough. Buying and selling doesn't have to be.